Hey everybody, Al Eberol for Financial Intelligence Training. It is Friday. It is October the 12th and it is 2018 and I am back in Fort Lauderdale today after spending the earlier part of the week in Southern California. Now in my post on Wednesday, I wished good luck to all those in the Panhandle that may have been affected by Hurricane Michael. Well, seeing the after photos, I now need to offer my prayers and my continued thoughts that way. The devastation is terrible. Now, the market has had its own degree of devastation in the past few days, and as of this post, though, the Dow is recovering, currently up over 380 points. Now, I find it interesting how we had a note yesterday from the White House that trade talks were underway as the market was hitting its lows. Geez, what a coincidence. Now, in trying to gauge the health of the market and avoiding that nonsense, you got to look to the macros, and they still remain in slight contraction. So this is not new, especially if you've been following the channel. Now, hopefully those that have been watching those indicators had already started to taper their equity exposure accordingly. Now, here's what really has me concerned about the current environment. First, the S&P broke its 200-day moving average. So let me pause right there for a second and say, so what? Well, yeah, it's a very critical area. And this is not good on the charts, and it is definitely the most decisive shred that we've seen in some time. But before you go running for the hills, let's think about that shred and recognize that it's not an actual new low. Now that sounds like I'm being bullish, doesn't it? Well, I'm not. I'm being non-emotional. So let's continue with that sentiment. I want you to look at the three main areas that I tell you to watch all the time. Have a gander at the financials. Then look at the transports, and then check out the semis. And here, we've got some serious leaks that have sprung in the dam. The financials, they got hammered. They pushed deep below their 200-day moving average. Now go back and look at the January to February drop, and you're going to see a very different tune. On the lows, they fell to their 150-day moving average. Look at the transports. 2 straight days of misery have it below the 200-day moving average, and back in February, specifically on the 9th, that intraday low didn't even have it test its 200-day. Now look at the semis. This is nasty, but it shouldn't be a surprise. The bigs, meaning the Dow, the S&P, well, they took the lead over from the betas early in September. The month had the NASDAQ slip over 6%, but left the Dow and the S&P in green. Now, what's of great interest to me is that all three of these key areas are in really sad shape. This makes it very tough for the market to go up and very easy for it to go down. I kind of draw a parallel. It's like swimming with an anchor. It's really easy to sink and very hard to stay afloat. A different story than what we saw at the earlier part of this year, right? They were holding as the markets were getting waffly. Now, we've got major leaks in the dam as a result of that. Now, these are leaks that are going to need repair sooner than later. Otherwise, we know what can happen to the dam. Now, this isn't me saying that we're falling and that we're going to continue to collapse, but rather me saying this is what needs to happen to prevent a further fall and resume the up. So, as I said, this wasn't me being bullish, and this isn't me necessarily being 100% bearish, but certainly concerned because of that negative weakness below. Now, in last week's post and in our class, I cautioned about the number of new lows in individual stocks versus the new highs as the stock market was making new highs. So underneath, we've got stocks that just aren't participating, but the market's making new highs. That doesn't add up. We need to see a shift there as well. So I'm going to suggest some really serious caution here and remind you to know exactly what you're going to do to govern your exposures. And if you're trading any of this volatility, you got to remember that stock and stock options is not suitable for all investors, and it contains a substantial degree of risk. If you're looking at the charts, as I've just suggested that you do, please keep in mind that past performance is not necessarily indicative of future results. I'm Al Eberol for Financial Intelligence Training. Have a good weekend, everybody. Thank you.